What a whirlwind in terms of economic cycles that we've had in the last few months. The cash rate has continued to move up, and sentiment has continued to go down, down, down. The prices are down across all Australia's major capital cities at this point in time. So let's have a chat today about what's going on with the cash rate and the Reserve Bank of Australia, and what's happened in the Queensland market in terms of land tax. So the cash rate just increased, if you haven't heard it, 25 basis points. This is the 6th time in a row that the Reserve Bank has increased the cash rate, leading us to a position of 2.6%. Now, this for the average Aussie is going to give a person around a 4.5% to 5% interest rate on a owner-occupied loan at an 80% LVR. So that's not too crazy in terms of the history of the Australian property market. Now, what needs to happen in terms of Australia's economy is certainty needs to return to the market. We're not seeing certainty yet, but sentiment is definitely starting to change. I'm having more conversations, people are starting to become more confident and get a better handle on what's happening with interest rates and how people are wanting to progress and put their money to work. Now, in terms of the cash rate, it's expected to continue increasing all the way out towards Christmas. And I think based on what they're saying and based on what the economists are saying, is we're going to land on a cash rate around about that 3 to 3.5% mark, which means the average Aussie will be paying around that 5.5% to 6% in terms of their owner-occupied mortgage. This is pulling money out of Australia's economy and trying to put downward pressure on inflation. Now, the data isn't quite out yet in terms of inflation, so the RBA could be more aggressive, but they want to see what's happened in terms of their previous rate hikes, how that's affecting Australia's economy, and what the data looks like moving forward. My personal opinion is once people get a handle on what they're expecting to pay in terms of interest rates for their owner-occupied residence and for their investment properties, people will look at their cash reserves and the cash they have stored up, which hasn't been spent on fancy cars, hopefully, or overseas travel at this point in time, and look to invest that money in the market. But they want certainty around interest rates, and so I expect that we're going to have that certainty around about Christmas or into the new year. Now, in terms of Queensland specifically, there was a bit of yo-yoing from the Queensland Government around land taxes. And recently, the Queensland Government announced that they're not going to apply those land tax changes that were proposed. To give you the quick recap, Queensland was essentially saying that they were going to charge people on their Australian property and pro-rata it based on their Queensland land holdings, rather than just charging a set rate based on people's Queensland land holdings. This is going to bring a little bit more certainty into the Queensland market. Given we're seeing the cash rate not increase as aggressively and those June 2023 land tax changes are not going to be put in place, this is giving investors looking at the Queensland market a little bit more confidence. So the Queensland land tax changes have been squashed for now, and the other state governments weren't going to provide that data around land holdings in their state. For example, New South Wales wasn't going to provide the data to Queensland to allow them to do that data matching in terms of land holdings across Australia. So we'll have to see if that comes back down the track. In terms of the economic outlook across Australia, Sydney and Melbourne have been the hardest hit in terms of property price falls. But this is to be expected because they have the highest median price points. Those prices which are significantly out of reach for most Aussies based on their current wage is where we're going to see those price falls happen most. In terms of the more affordable markets in Adelaide, Perth, Brisbane, that's where the potential is for most property investors and most owner-occupiers looking for an interstate move. I don't think we're going to see a rush into the property market late 2022, but as stability comes back to the market in early 2023, we may see more people take action in early 2023, whether they're looking to buy their owner-occupied residence or invest their money in the property market. If you're looking to get educated in the property investing game, I have a course called Invest with Purpose. Head over to my website to check out the course and use the discount codes provided. Now, what do you think? Do you think interest rates are going to continue to increase around that 5 or 7 or 10%? Are we going to see property prices continue to fall in 2023, or will the market stabilize and potentially see some bounce back? I'd love to hear from you in the comments down below. I pretty much reply to all the comments, so let's have a chat about your thoughts on the Australian property market. If you could drop a like on this video and subscribe to the channel down below, that would really help me out. And click this video over here if you're interested on all things real estate, renovating, and financial freedom. I'll see you in the next one. Peace.